Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another live stream. Happy Monday, and I hope you're doing well. Good to see some familiar names and some new names in the chat today. Hey, Vanessa. What's up, Justin, Vincent, Sayukar. Hopefully I said your name correctly. Gareth, Clips for YT. What's up? Good to see everybody here, and happy Monday. So, what do we've got on the radar this week? It's actually... Let's just pull it up and just take a look here really quick at what we are thinking about. So today's pretty quiet. Tomorrow, you have the Bank of New Zealand putting out their interest rate statement. You also have UK CPI and the Fed meeting minutes on Wednesday. Then you have on Thursday, you've got, let's see, some PMI data out of the US and out of Europe. And on Friday, we have the Jackson Hole Symposium, in which Jerome Powell will be speaking. So not a huge week in terms of economic data, but we do have, of course, a ton of headlines like this one with Russia, Ukraine, and the US kind of negotiating back and forth whether or not there's going to be some sort of, situation here. Of course, controversial as always, anytime you get some sort of peace negotiations, it involves compromise and on all sides, which nobody wants to compromise anything. And so, we'll see if anything develops there. Obviously, Ukraine does not want to give up any territory. Russia wants to come out looking like the victor, and the US just wants the war to end so they don't have to spend so much money on it. That's cutting to the chase. And so we'll see what happens. But the market itself, I think, was looking for a possible sharp move one way or the other. There was a little bit of a possible movement you could have seen with the meetup between Putin and Trump, but we did not see anything of substantial volatility in either direction. Gold is just slightly higher here on the day, but still struggling with its very low volatility. Again, gold has been trading in a very tight range and not very constructive in either direction. So, Laura says, do you think the UK is entering a stagflation environment? COT reports are long-term short on the British pound. Let's take a look. The best way for me to answer that question would be to pull up the UK heat map. And right off the bat, what we can see here is that GDP growth in the UK is still, let's ignore the surprise factor for a second. If you want to talk about kind of like the longer term, like what does the UK look like? Let's just look at the actual column and say 0.4% growth is not super impressive growth in terms of economic performance. And let's look at inflation. Inflation's at 3.6%. So in a really easy, quick answer, if you want to talk about, I guess you could also look at employment. Like, let's look at these three. These are the big three for keeping it really simple. Unemployment rate would suggest 4.7%. That's fine. It's not too high. It's not too low. That's fine. CPI, 3.6%. That is above trend. That is sort of problematic. And at 3.6%, you do also have the risk of that kind of spiking higher if you get any sort of, sharp rise in the price of oil, etc. And then GDP growth is not really great, right? So is there a risk of stagflation type environment for the UK? Yeah, there is. Would I say that we're in some sort of stagflation spiral right now for the UK? No, because stagflation spiral would be like this number is just climbing dramatically, and this number is also climbing, right? If you get unemployment spiking, and if you get low growth and high inflation, yeah, that's a scary environment. That is not fun. Because what does a central bank do in that environment? Think about it. What does a central bank do if inflation is on the rise and unemployment rate is on the rise? Think about it. What do you guys think? Let's say you're the central bank of an economy. Let's say it's the US, let's say it's the UK, whatever. What do you do if your economy is hurting, so you want to cut rates, but inflation is skyrocketing, so you want to hike rates to stop the inflation? What do you do? Stagflation is the hardest dynamic for a central bank to deal with. Maybe deflation is also really hard. Deflation is really hard when prices are going down because the economy's in the dumpster. That's also really tough. You just want, you know what central banks want? They want prices to rise gradually. That's okay. Why would prices going down be a problem? Well, why do prices go down? Believe it or not, there are times in history where prices of goods and services go down. Let's say you're a business. Why would you drop your prices? If you have a lot of demand, why would you ever drop your prices? Let's say you own a taco stand and there's people lined out the door for your tacos. Why would you drop your prices? You wouldn't. You'd raise them. If you got such high demand, you would raise your prices, right? That's positive rise. Like that's a good reason to raise your prices. So much demand that you can get away with selling them for more price. So you should. Why would you drop your prices? You would drop your prices if there wasn't enough demand and you needed to get more people to come buy your tacos. Okay, so deflation is bad. Everybody on paper is like, oh, I'd love for house prices to go down and car prices to go down and the grocery store prices to go down. Everybody would love that aspect, but they wouldn't like the symptoms that come with it. Tons of people losing their jobs, the economy in shambles, a lot of, deep, dark depression for an economy is not fun, right? You know, when prices drop, the Great Depression. I don't think anybody would be, it doesn't matter if the prices drop a little bit if you don't have any income because you lost your job. It doesn't matter if prices dropped by 10% if you didn't have a job anymore, right? So deflation is horrible for central banks. It's absolutely horrible because then central banks, the cost of existing debt goes up in a deflation type environment. We can get into all that theory. I don't want to get too far into theory this morning. I didn't mean to go down that, but cost of existing debt goes up in a deflationary environment. Unemployment goes up during a deflationary environment. Typically, that is the cause of lowering prices is because people don't have jobs and they can't afford anything. So part of the reason why we've seen prices still rising is because people are still employed in the US. Right. So like you can say, prices are crazy, but people haven't lost their jobs. The real terrifying dynamic for a central bank is when you have a ton of, prices going up and then labor market data starts to hurt. Right. Ryan, thanks for the question. How often does the put to call ratio? Look at this. The producers are on the button today. Thank you very much. Yes, it updates daily, the put to call ratio. So if unemployment rate, where it's at 4.2%, we're not in problem territory. But if you jump up in unemployment rate and prices are still high, then you got problems because then you got people who don't have jobs anymore and they can't afford things. People already feel that it's very expensive. I mean, it is not just feel, it's expensive out there, right? So it's expensive to buy a car. It's expensive to go to the store. Everything is expensive. We've had so much inflation in the last few years. It's wrecked a lot of the middle class, right? So you have this situation in which all of that is kind of being supported or propped up by the fact that people are still employed. If you lose the employment, that is where, and I know this sounds doomsday-ish, but that's where gold skyrockets and the stock market drops hard, is where I think the story for the last few years is we have been able to survive this environment. We had the COVID pandemic, prices skyrocketed. How did we survive this without some sort of major market crash? Well, because people stayed employed and companies continued to produce great profits. Companies producing great profits, sometimes people love to be like, oh, corporate, America is evil. Well, it also supports everybody's income, right? So strong earnings from companies have also supported, people staying employed. People have been employed in America. And that has been part of the reason why, yes, you've had inflation, but employment has been stable for the most part, producing an environment where people can continue to spend. And that's why prices have gone, that plus the supply-based problems that we had in the COVID pandemic have produced this environment where the stock market has continued to do very, very well. That brings me to kind of where I wanted to go this week, which I hinted at with my Sunday video yesterday. There are some signs, in my opinion, and I don't want to sound like a doomsday person or anything, but there are some signs to me that the stock market just does not look very attractive at this time, in my personal opinion. So if I'm looking at a couple metrics here, first of all, I did some adjusting this weekend. If you have the Edge Finder under US Economic Heat Map, it's one of my favorite tabs, and it shows a lot of the scoring that our system does. Under the US Economic Heat Map, what we have here is the macro data summary for the US dollar for currency traders and gold traders, and the US stocks metric here as well. What this shows you is that the impact of this economic data is pretty negative overall towards US stocks at this time. Yet you have stocks at all-time highs. So let me show you what I mean. Okay, manufacturing and services PMIs both missed expectations pretty bad. That's a forward-looking indicator of the economy that looks negative. Retail sales missed expectations narrowly. That's bearish for the US stock market. The producer price index last week, I know a lot of you guys saw that. We had a big spike in inflation. Inflation is not good for corporate earnings. And we've been struggling with inflation for a number of years. PCE, also last time around, we'll get some latest data later this month, also came in higher than expected. We had job openings, which came in a little bit soft. Non-farm payroll was really rough. So you have a lot of factors here that are suggesting some not so attractive situations for the US economy. How long you've been updating and working with the Edge Finder? Every day for the last, April 2022 was when we launched it to the public. I started really working and designing the tool. I want to say like middle of 2021. So 4 years. It's been a long road, and it's gotten better over the years. But yes, it's a continuous process to build this thing into, this is my child in terms of, studying fundamentals. It's the production that we've been working on for a number of years. So anyways, most of my metrics here, not my metrics, but the US economic metrics that we study here are suggesting that stocks don't have a remarkable backdrop in terms of macro data at this time. Now you could make the case, well, yeah, but they're going to cut rates. Well, there's some theory on that, right? And a lot of times the stock market does not drop hard on, it actually oftentimes drops harder on rate cuts, believe it or not. Like the actual onset of rate cuts, if they start coming in thick and heavy, like the economy starts to hurt, fast rate cuts are historically actually very negative for stocks, because if they have to like kind of dramatically cut rates, it's because something is wrong, right? So I equate rate cuts as like medicine in financial markets. If you're begging for your medicine, what does that mean about your health? You're probably not healthy, right? So to me, rate cuts are not bad, right? Slow rate cuts are great. Like, oh, we'll cut a little bit here, cut a little bit here. The stock market doesn't really need it, but we'll cut rates. Like that's okay. But a cut because the economy starts to hurt really bad, or we're behind the economy declining, like we need to cut rates, but we're like too far behind the economy already moving negatively. Like the thing is, right, there's a lot of momentum that happens in economies. And so if the economy is already in a momentum to the downside and we don't cut interest rates we're too late to it, that's the risk, is the economy can already be moving with momentum in the wrong direction. So anyways, I think that bodes well for gold, right? So my stance on gold is bullish. I am looking for a breakout through the highs, pullbacks into this region. I like the idea of continuing what we started in 2025, or a pullback to the bottom end of this range. I know I've been saying this for a little while, but I'm still going to stay with my, my setups there. I believe Edgefinder also has a bullish rating for gold at this time. Yep, gold is getting a +7. Silver is actually getting a +9. So metals look attractive to me at this time. Euro dollar also looks attractive to me. I think the dollar could continue to hurt this year. Let's just take a look really quick at where euro dollar is trading today. Yeah, so I'm looking at euro dollar. If we can get a pullback into 1.16, I like it even more at 1.14. So we'll keep an eye on that. Silver also looks interesting to me on the long side. Would be interested in a move back to the 36.50 level or a breakout and retest similar to gold. But I actually like silver a lot. I think that added volatility that you get with silver could be interesting. So I like gold. I like gold and silver, but silver's chart looks prettier. I don't know about you guys, but this is not, gold. I would still trade gold if it gives me a pullback, but silver's chart looks just much cleaner. You have a clear upward trend, right? To me, it looks like the path of least resistance is to go with silver over gold. If I look at XAG, XAU USD / XAG USD, if I take a look at the gold to silver ratio, you can see we've had some momentum here to the downside. This is showing you that silver is outperforming gold recently. I think that could be set to continue. I think we could move back down to some multi-year lows on that. I think silver has room. So I like silver a lot. I'm keeping an eye on it. Take a look at the daily chart. I think the risk to reward becomes a lot more attractive on silver if you get a move down to like I said, 36.50. I think you could probably look for this. So I'm looking for this kind of move here. I could also take another stab at this level here. So I like both of these types of trades on silver. Put a stop below this structure, put a stop below this structure. Both of those would probably be trade ideas for me, depending on, as long as the Edgefinder still has that confirmation signal. I like that a lot. So silver pullbacks would be interesting to me. Nick, could you show the Bitcoin to gold ratio on Edgefinder? Yeah, Lee, that's a good thing to think about right now. I've just not been like, the thing is, I'm very rarely bearish on stocks. I'm very rarely bearish on stocks. And I don't want to say that I am bearish because somebody asked me, well, Nick, what are you short? I'm short nothing. So I'm not short in the market. I'm not like, oh, S&P is going to drop. I'm not trying to time that whatsoever. So let me just get that out there. When you hear me saying I'm a little bit worried about inflation, I'm a little bit worried about employment data, I'm not shorting the market, but I'm also not buying the market, and not buying the market is a position. Like if you're someone like me who trades a lot of indices, I trade a lot of indices. I watch gold, I watch a wide range of markets. I'm not buying risk assets right now because I'm a little bit cautious. And take a look to Lee's point, Bitcoin to gold ratio here, signaling a little bit of a possible formation here. We may be seeing this thing kind of turn down in its momentum. Why do we care about this? So Bitcoin to gold ratio, why do we care about this? Well, because it shows you just a little bit of the risk appetite of the markets, right? Because if we're talking about Bitcoin, which people buy when things are good, right? People love Bitcoin when the markets are up, when things are good. People love gold when they're scared or something's going wrong. I do think that you may get a reversal in this kind of, okay, we've had up, sideways, up. I think that if the data keeps falling the way it's been falling, I think you could see a move lower. I think gold could have push higher, and I think you could get Bitcoin rolling over further. Bitcoin's down another 1.5%. To me, this was, if you're a Bitcoin bull, right? You've got this area of support. Let's see what happens if we come down. You have this area, you have this area, this zone of support. But the failure here, right? The big push higher If this just kind of came back and tested this area, that could support, from a technical basis, that was just sort of a break retest. But we're not seeing that, right? We saw the breakout here in Bitcoin get punished and then fail at that support level. So to me, I'm a little cautious on Bitcoin. And that, to me, Bitcoin's been sort of leading the market this year. Like Bitcoin was going up real early in April and signaled a lot of risk appetite. That is why, to Lee's point, who mentioned we should pull up the Bitcoin to gold ratio, that's why this thing has been a really cool indicator this year. Like, keep your eye on this thing, man, because I'm telling you what, this is showing you the risk appetite of the market really well. In fact, like almost just as good, if not better, than the stock market. So to me, I'm just a bit cautious. I'm not, like I said, I'm not shorting this market. I'm not shorting Bitcoin. I'm not shorting S&Ps. I'm not shorting NASDAQ. I don't like that trade 9 times out of 10. I'm just not interested in shorting markets that go up over time. Same with gold, right? For that matter. But by not taking a position, you are sort of in the, not the bearish camp, but I'm very much neutral on stocks. Like, I can't justify buying stocks at these levels. I can't justify getting super bullish off the idea like, well, the Fed's going to cut rates. Well, yeah, but a lot of times rate cuts are too late anyways if they're really needed. Like, if we start seeing unemployment sharply rise, a 1/4 point rate cut's not going to save the day, right? And if they need to cut rates way quicker, that is historically not a positive thing for markets. If they need to cut, if the Fed starts saying we need to cut rates dramatically, I can tell you right now, the stock market is going to be down quick. If your doctor came in and looked at your symptoms and said, we need to operate on you immediately, is that a good sign? Heck no, it's not, right? Heck no, it's not. That's what people who are like, oh, we need rate cuts, we need them right now. Like, I think we should have been cutting interest rates. That's my opinion. I think there's a severe risk that we could be on the precipice of seeing rate cuts that came too late. So am I shorting the market? No. So I know people are going to be like, oh, if the market goes up for a couple of weeks from now, I missed a part of it, but I'd rather like miss some of the move higher. And what I'm specifically doing is I own a bunch of stocks and I've sold covered calls against a lot of my positions. Almost all the stocks that I own, I have short calls against them. Things like Tesla, things like Nvidia, American Express, Home Depot, PayPal. I have a whole bunch of individual stocks that I have been selling calls against. So I own the shares and I've also shorted calls. That's called a covered call. You can create, essentially, you cap your upside in exchange for getting paid a premium. So I've collected premiums on a whole bunch of stuff. It's a neutral strategy, or neutral to slightly bullish strategy, if you want to call it something. So yeah. So I think that, gold in the second half this year, at least at this time, and again, this is why markets are hard, is I could be dead wrong about this idea, but I think gold has a very strong possibility of outperforming the S&P 500 in the second half of the year. And by the way, it's outperformed it in the first half. Gold has been a monster this year. It's done really, really well. I also mentioned silver. I think silver is a great setup on a pullback, something that I'm looking for. Top setups page has a really good reading on silver right now. So I'm watching this one for a pullback, see if I can catch a trade. I also want to look at oil, because oil was a possible short setup for me last week that kind of ran away from me. So if it gives me a pop here, any sort of, pop to the upside here this week, I actually like oil. Same reason. I think the economy may be showing some weakening signs based on the metrics that I use within the Edge Finder. Again, big contributor to the economic score, or the overall bearish score, is from the economic data, right? So economic data here is negatively impacting oil score within our system. If you're new to the stream, new to the channel, what I'm looking at is the Edge Finder. It's a tool that scans a ton of market data on the sentiment side. So it's looking at institutional positioning. It's looking at crowd sentiment. It's looking at technical momentum, like trend following stuff. And it's looking at economic data, jobs reports, growth metrics like GDP and PMIs, retail sales. It's looking at inflation statistics, CPI, PPI, and PCE. It's looking at all these different things and scanning those market data points and generating a bullish and bearish bias for our favorite assets, adding fundamentals effectively to our analysis. Even if you don't fully understand fundamentals, this is a great tool to help scan them and make them much easier to follow. It all is automatically generating. It's a bunch of it is on hourly timers, so data is being pulled in, and we've been building it for the last few years. If you don't have a copy of the Edge Finder and would like to try it out for 30 days, we'll drop a link here in the chat to where you can check the tool out, get some information about how our trials work. You can get 30 days access to the tool for a small fee, and you can try it out, see if it's right for you. So we'll drop the link here in the chat to where you can get that. Here it is. Fill out this form if you're interested in the Edge Finder, if you want to get a copy, if you want to try it out, 30 days, if you want some information, or if you just want to speak to someone about it. We did do something cool on the website. I was working on this weekend. So if you go to, let's go to a1trading.com/contact. If you just go to our website, A1 Trading, you can just hit this contact button. We just made 3 options available. So if you have any questions about the tool whatsoever, you just need some help, you can chat with us live right now. We have support reps in office. You can send us an email if you need some sort of support. Let's say you already own the Edge Finder, you just need some help on something. Or if you need to schedule a call, you can do that there on the website as well. We're now offering the ability to set up a short, brief call with a member of our support staff if that is something that you're interested in, or you could use some help, or you're thinking about getting the Edge Finder in the future, just had some questions about it. We're leveling up our support game to make sure that people who have questions or need help with our tools can easily get access to that and get the most out of the tools that we offer. Look, this is a passion for me, is to build great tools for traders. I use them all myself every single day, as you see in my videos. And I always love to, this is one of the biggest flexes for me with the Edge Finder, is that when I have been on vacation in the last few years, I don't even have to listen to the news. I still do it because, I'm a little bit of a market junkie, very much a market junkie, but all I really need is this page and my technical charts, and I know how this thing is built, and I trust that, okay, the economic data is being screened for me, technical reads are being screened, and I essentially get sent a watch list to my phone or desktop. You can pull up the Edge Finder on your phone too. And I'm just looking for setups. This was one of the most of the surreal things as I went to my sister's wedding in Greece last year. And while I was in Greece, I caught a beautiful trade on silver. Like, I just bought silver and it just ripped and ripped and ripped. And it was all just because, Edge Finder showed me the setup. I looked into it for about 5-10 minutes, found a technical setup, put my limit order out there, and then got tagged in, and it just ripped. And I don't want to say at any point that, the Edge Finder is a magic holy grail system. It doesn't always work out, and nothing is perfect in markets, but having the simplicity of a watch list generated for me each and every day, and then setups that essentially are waiting for me. And then I just pull up my technical charts like I'm doing literally. This is why trading the style that we trade here with the Edge Finder's assistance is very repeatable. Like, I know what I'm supposed to do this week. Like, okay, you want to talk about simplicity in repeatability in what we do with the Edge Finder? Here is my setups for the week. Like, I'm still going to live stream and make content about what's happening because I'm a market junkie, like I said. But my setups are shorts on US oil pullbacks, longs on gold and silver pullbacks. Euro dollar is also an interesting one on the pullback. Like, this is me setting up my week. Those 4 look at the best to me. I like the charts a lot. I've screened each one of these. That's my whole to-do list. Like, okay, I'll take a stab long on silver if it comes down to this area. Gold, I like this area, the 3270 area. Oil, if we get a pop up into the 66 level, I'm looking for a short there. And then euro dollar, I'm looking for longs at a pullback to 1.16 and a pullback to 1.142, let's call it. Those are all my setups for the week. Is it a one-time purchase? It is. And we offer to split it up. If you are interested in getting the Edge Finder and you want to split it into some payment plans, we do offer that. And if you need some information about that, the best way to get some information is to speak directly to our support team. We'll drop a link here in the chat. If you don't have the Edge Finder, I'm telling you, it is worth every penny. It is like a business expense. If you're treating your trading like a business, pick up our tools and start using fundamentals in your trading. Most traders are they know they're useful, but they lack the tools to do them. That is why we're in business. That is why we have a staff of people that build and support these tools so that you can get back on the charts and mix in fundamentals without spending $2,000 a month on a Bloomberg terminal. That is legitimately what it costs. It costs $2,000 a month to use the Bloomberg terminal, or you can get access to the Edge Finder for a one-time fee. Or if you need to split it up into payment plans, you can do so as well by sending us a direct message and just letting us know that you'd like to get a copy. You just need to split it up into 2 or 3 payments. Nick, can you tell us more about the 3 key points to know when trading silver? So a couple things. I love trading silver. I've traded silver for many years now. It's up there in terms of my favorite things to trade. I like trading gold more when it's moving correctly, but gold is not. It is a chop fest out there, man. Like I don't even want to know how much money has just been chopped to pieces in this mess, right? My guess is retail traders have been doing far better trading silver than trading gold. You know what the cash cow for trading gold in the last few months has been? Selling strangles. If you've been selling strangles, which is an options strategy, essentially selling calls, selling puts. If you've been, you essentially in that situation, if you sell puts and sell calls on the options market, you make money if the market doesn't move anywhere, right? So I bet you a whole bunch of institutions have been sitting in short strangle positions where they've sold a call, right? And they've sold a put on both sides of price. And as long it's essentially being the market maker, right? They're like, oh, you want to buy a call saying gold's going to go up in the next 30 days? Go for it. You want to buy a put saying that gold's going to drop massively in the next 30 days? Go for it. Right? So the market maker has just made a killing in this. The average trader is getting chopped to pieces and trying to read the tea leaves on where gold's going to go, where we just have not had movement. And that's okay to acknowledge and just say, look, sometimes gold doesn't move, but I bet you silver people have done better on. I think there's a better, smoother chart here. I think silver we've actually got direction, right? Just to me, that by itself is a reason to watch silver more, as you've had this clear movement happening. And so a pullback on silver looks attractive to me, or a breakout and retest. Like I think we actually have the potential to keep grinding higher here on silver. So I like it a lot. Which time frame do you use? I primarily trade the daily and the 4-hour chart. But the daily is truly my favorite time frame. It's clean, it's simple, and I don't have to spend a bunch of money on the brokerage in and out of the market 3 times a day. That becomes very costly. Entering and exiting the market on repeat like 3-4 times a day is very expensive over time, because you're every time you enter and exit, you are either paying commission or your spread adds up. If you're trading Forex and you give a pip every time you enter and exit, right? Your spread, that adds up. Like over time, that becomes very expensive. So the less you can trade, the less your trading expense is. These are things that like even a lot of traders who are day traders who get to a point where they're break even, they realize they're still losing money because they're still spending a lot of money on spreads, commissions, swaps, etc. So swing trading to me is it's preferable to my style. It's preferable to my time availability. I don't spend all day long staring at the price action chart. I've got other things going on in my life. So swing trading just suits my lifestyle better. But anyways, I don't have anything that's like pull the trigger ready today. Look at that. So oil's now moving lower here this morning. Yields are flat. Bonds are flat. Stocks just opened up. Let's see if we've got any movement there. Meta's down 2.6% this morning. I've got a short call position on that. I may be able to buy that back for half profit. Actually, what are we looking at today? Let me see. See if we've got anything to do on our meta position. What's Hood doing? Rocketing higher. Meta. Oh yeah, look at this. I think I'm going to close this right now. I'm just going to take this 65% gain on this, close $500. I have a call that I'm short. I'm just going to close this, I think. See if I can get out of that. See if I can just take a profit, close for, there it is. All right. Love that. We'll take that move right there. So Meta moving lower here this morning. I was able to short a call, a covered call on my Meta shares. I just closed that out for a $550 profit. I'm just going to now very nice. Meta short call position closed for a profit of about 65%. Slash, what was the P&L on that? $549. $549. Meta shares down on market open this morning. Going to lock in a profit and look for more setups. And then my little disclaimer here. All right, cool. I don't mean to derail the stream on that, but yes, I closed that trade on Meta. I had a short call position, which means that I'm selling someone else the bet. Somebody else wanted to bet that Meta was going to go up. I sold them that bet. So when the stock drops today, or when the stock dropped today, those calls are worth less than they were, and I just realized those gains. Some might say, well, why don't you just short the stock? Well, the cool thing about selling a call or selling a put is that you get the added advantage if the stock goes nowhere, you still make money because those options lose value over time. I know not everybody is an options trader, and I don't usually do that on this channel, but we need to close that trade. Robinhood, I would love to see this one go lower here as well. I've got a short call position on there. Home Depot, I also have short calls on. Amazon, short calls. AXP, short calls. CRM, nothing on that one, just long the stock. Airbnb, I've got short calls on this one that are in the money, which is not so great. Uber, flat today. Fortinet, ISRG, PayPal, NVIDIA. NVIDIA, if it moves lower here today, may get a chance to close out of those. Anyways, just a little quick check on the options market side of things. No Ivan today? Okay. Do we have anybody else lined up? Let me just check. No Ivan today and no one else lined up. Okay. If you're enjoying the streams, by the way, hit the thumbs up button and subscribe. And also, if you're not in our Telegram channel, we're going to be posting some more analysis. We've been posting a ton of stuff. If you're a Forex trader, if you're a gold trader, or you're an index trader, this is the spot to be in. We'll drop the link here in the chat really quick to join the Forex and indices and commodities Telegram channel. And then what we'll do is, I know I just splurged a bunch of stock stuff. If you're a stock person, we'll also drop the link to the stock Telegram. So we have two Telegram channels. You can see indices, commodities, and Forex, and then we have stocks and options. So if you would like to join, you can join both, but make sure you join what you're interested in so that it actually is relevant to you. If you're interested in joining our Telegram channel, here it is. We just dropped the link. We post a bunch of research. We post, chart markups. If you're interested in macro information, what's happening in the jobs report. If you're interested in price action stuff, if you're looking for trade setups, we have a team behind the scenes that puts together some great content in this Telegram channel. It's free to join. And if you're a stock person, make sure to join our stock market stock and options Telegram channel as well. So there you go. We post like charts a day, like I did Adobe here. The editor put that together for us, and then, posting videos and things like that. So all good stuff. With that said, guys, we're going to close down the stream. Unfortunately, we don't have a second host today. Thank you for joining me during this segment. If you joined towards the end, you can just rewind if you need to go back and watch it, or the live stream recording will be posted to YouTube shortly. Thanks so much for tuning in, everybody. Have a great day ahead, and I will have a video out shortly on more information about markets today. Stay tuned. Bye, guys.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.